Hello, so this is a setup one going on the DAX. I happen to be monitoring it from this point onwards. So there was a setup one around here earlier. So this is London Open. We traded the low bot. This is our strategy. It was a break even, and then we took a trade here with a 13 stop loss, and trailing candles got 32. But then this 3 demanded that we wait for a nice setup wave 4 to form. And so we wait, and it goes sideways, and now we have evidence that it wants to go finally up. So we have put a pending, we had a pending order there, and then new box was created. So we deleted that pending order and set a new pending order down there. And as most of you would know, I use Snorm's ATM. For AIMS, we never coded a trade management software because we're just so comfortable with using Snorm's whatever things that he codes. And to be honest, he's made me lazy. I would have coded indicators for my system a long time ago, but ever since Steve came into my world, this has just been happening automatically. He's my guardian angel. Anyway, so we have a black dot here, but we will keep the pending order still there because the box is tight, and I think ATM will cancel the pending order if price hit stop loss anyway. So this is still a valid long signal, even though it's a black dot. But the black dot indicates that price is close below the gator. But if we asked, is this a setup, we can still see a strong 3, and we can see a 4 and a very flat 4. As you can see, if I draw the box, it's a very flat 4. It's coming close to the purple. Still not, I don't think these colors are correct. Anyway, not 38%. So the price comes to the fib retracement levels in 2 fashions. One is it goes up and then slightly lower momentum, but still with a steeper angle, like when it was doing around here. It can come back, it can come down to the 50%. And those are steep wave 4s where you cannot use setup 1, but you can still use the concept of Apple, where you take the reversal of the wave 4 back into wave 5. But the ideal setup 1 has this kind of wave 4, where there might be a little bit of impulsive kind of correction, but then soon it loses momentum and it starts to go sideways. So if I correct this box, we could assume, we can say that the low point of this wave 4 is this and the high point is that. Usually the high point is basically the B trap, or the second wave up. So this is the first pullback and the second. So most of the time it's a B trap because people think it's the resumption of trend, but it's not the resumption of trend. It's actually the pullback of the pullback. So this is an impulse wave. Let me refresh this. So if you look at this, this is where you thought, oh, resumption is coming, but that's why we have these rules of the correct cross of zero line and waiting for the price to go sideways. So you have to qualify a wave 4 not only by the pullback towards purple, but also time-wise. And time-wise, it's done by waiting for the cross of zero line, and then for it to come back up, and then creating this tight box. The thing that I was talking about was that when price first pulls back, so it's quite impulsive fashion because the angle is quite steep, as you can see here. Right, this is how it was coming down. And then when it went up, this was actually the wave of this. It wasn't a resumption, as it turns out. And sometimes it would actually go from here and it just continues to do its fifth wave. In that case, it becomes the fifth wave of the third wave, if you know what I mean. So sometimes you have a wave where within the wave 3 you will have a divergence. So there are two kind of divergences. One is before the cross of zero line. The one before the cross of zero line, this is not a divergence by the way, indicates the 3, 4, 5 structure of the wave 3. Let me see if I can find an example. Actually, we have it. Well, this is not quite a divergence. Yeah, there's a divergence here. So this is not a clean wave, but this can be used as an example, is that this divergence is before the cross of zero line and indicates that when this wave on its own was a wave 3, this indicated the 5 of 3. Here's another example. This is not a divergence. Here's a divergence here. So you can see this is peak corresponds to that peak. This peak corresponds to this peak. This corresponds to this one. And so price went up and momentum went down. That's divergence. So this divergence indicates the wave within the wave. So this is the 3 up, the 4 and the 5 of this 3 up. And that's what it shows. But when it's a cross of zero line in between, then it shows the 3, 4, 5 pattern of this time frame. Right, so if I bring ATM, most probably as soon as it touches the stop loss, it's going to delete the pending order. And this is not a setup one at the moment. It has been cancelled. So let me update. That is, oh, you couldn't see what I was writing. Okay, I'll just delete this. Right, so we now see an apple signal. I don't particularly like these kind of apples. So an apple is a reversal signal, and it must be used for a wave that is impulsive. So sometimes you have impulsive wave 4s, but they lie within the 3, 4, 5 pattern. So what I could do is to go to a quarter and start my journey from here. So the journey begins and the other one will become the add-on for it. And now we have the dot set up again. Eric, how can you leave from a situation like this? Here we are. So now we have an apple that almost touched the purple, and we have the original 1% position on the box. So we shall see what it does around this level, and I think around there. If it crashes through, that would be nice. Usually what happens is so price does this stuff, and it would either go up or it would bounce back. So in that case, when you moved your stop loss to break even, you get out for break even, because you don't want to stay in hopes saying, oh, it's gone that much up and come back. So by the rules of the wave principle, when price moves when there's a certain number of growth, let's say 10 points up, then I don't want 10 points down. This is against the wave rule. So if my growth goes, and I apply this concept to my the growth of my account as well. So if my account is 10% up, I will not let it come down 10% down. I will stop if it's 5% down. I will have to do something here. I'll have to do everything so that it doesn't go below this. So on some other occasion, it will come here, not like so. Actually, it will come here and crash through, come back and retest, and then resume. In that case, your stop loss should be here. And now it's simply the case of waiting. So it looks like there wasn't really a strong introduction of buyers going on. It's just the pause still continues. They're still hunting for stops, and they are triggering, introducing some buying in there, but not real selling going on, as well as no new buying going on. We are officially in the territory of wave 4 still. Possibly wave 5 has started, possibly, but obviously wave 5 will be confirmed only if price goes above this level, and that is when we will see the first divergence. And divergence is the only confirmation, proper confirmation, that this particular wave is a wave 5. So with every wave, it has like 3 phases of its life, where at first stage it's a pure potentiality, at the second stage it's a higher possibility, and then at the third stage it is a confirmation. So most of the time, if you're looking for wave 3, it would not be easy to find a spot where you could say there's a well, you can actually put it this way as well. There is always a potentiality of wave 3 as long as you have a tight range going on. So you'd say when the market is in a tight range, any breakout that happens. So let's suppose, by the rules of 10-second Elliott wave, if you check the last 100 candles, and if in that 100 candles price has been within a certain range, so let's say if the range of the past 100 candle is 50 points, and if you mark that range, if the price breaks that range in either direction, that will be your wave 3. So when I look at this chart, in the past 100 candles, price has actually created a peak of AO. So that is why this is a wave 3. And so this wave 3 depends on this measurement. And so when it was here, it was also marked a wave 3, because when you looked back to the last 100 candles, you found out that this is where the price had moved, and this was the highest peak of AO. That's why it was wave 3. And this one is wave 4, because it is the first cross of zero line against the previous peak of wave 3. So that's why it's wave 4. And the next one is going to become a wave 5 only if it diverges based on this peak, and it will only diverge if price goes above the previous price that created this wave 3. So let me repeat that. If price goes beyond this point, and if it goes in a normal fashion, in most cases AO will create divergence here somewhere. So this probably that comes around here, the peak, if it goes up there, and that would then confirm. And pip wise and distance wise, how it travels, it would not travel as much as this. So if this one has moved 67 points and now it's come back by 23, then what it will do is that so if it was 67, it's going to be around 60% of that, so it's going to move 40 points up from this point, and that is why, so it's going to come around here, around this point. And let me put my see, so this is an automatic study of this concept that I just told you about. So if this moves 70 points and then comes back 23 points, then from the bottom of that 23 points, you can say 60% of that move, which would be about 40 points. So it's going to go 40 points up, and that will be the end of wave 5. And that is what we are betting on. If it doesn't happen, then that would mean two things. There was either no wave 5, or there was a wave 5, but it moved in a fashion that doesn't conform to our trade management plan. For example, sometimes it goes up and down and breaks the lows of Ames box, or it goes really slow. So you'll have a wave 3 which is quite impulsive, and you have a wave 5 that just kind of like goes very sideways. In that way it closes us out, or we run out of patience and get out and stuff like that. At the moment, if you are a beginner, you are jumping up and down in your chair, you are praying to God, Lord Jesus and Mary, Muhammad and Allah and Brahma and everyone else, and you are praying that this price breaks out so you can make some money. Reality is, none of these gods, or if there is one, actually really care. And if you call people or you do whatever, the only thing you can do is to just calm down and relax and accept your risk. You have taken a risk. It was a calculated risk. There was always a chance of the market not going in the direction that you had hoped for. You already know that, and this is what we call the probabilistic mindset. You have to have it. You have to know, if the market goes against my wishes, where am I going to get stopped out? And that is always half of what is your potential profit. So our potential profit is around 20 points there. So we will get out around 10 points. And that is our stop loss here. And now I have a choice of exiting early if I want. And so that way I will minimize my risk, which will be only half. And so that's one way of doing it. But I'm in the mindset at the moment of not really giving a shit. Because I already have profits from this and before. So if this was my first trade, I probably would have got out by now. But I had a break even here and a 2% here. So I can invest this 1% into it, because even if I lose, I will still be left with about 0.75% profit. And that is huge in terms of, compounding and stuff. So I'm allowing this trade a little bit more room. It can go up and down. And if we are going to get a wave 5, then I have already invested in it, and I have invested time in it. And because it didn't move that much, I got to talk a lot as well. So we can get a bit of a video. But it looks like the up move was not really a move. It's just sideways wave forward at the moment. What we would need is a strong breakout, which is not happening. So I'm going to press and yeah, this is how I change my mindset, because it's M1. Every candle you can change your mindset or decision per candle. So every minute you can change your mind, that's fine, but not inside a minute. So I've hit that and I have minimized my risk. And if it hits it, I don't care. I do feel like my stop loss should be below this, because that is where I will be totally proven. But I'm pretty sure at the moment is that this wave would take a little bit longer. I think the market is waiting for something else or whatever. It's chaos, or chaos, as the Americans would say. It's chaos, or it's chaos. Now, it's not a very exciting, beautiful trade, but I've invested time in creating this video. I'm going to upload it. Hopefully you learn something from it. Losses are losses. They are real. They happen. Loss number 1. Loss number 2. Well, they were actually one. This is just one trade split into position. And as you can see, I was quite right about these levels. I wanted the stop loss to be around here, but I really need to do breakfast. So I will leave the recording on, and I'm going to do my breakfast. Maybe I'm right, maybe I'm wrong. We'll see. So now I'm going.
Joining us. I haven't asked you anything yet.
I know, and your facts are all wrong. So shush it, give it, and ask me a question.
Okay, Mr. Mayor, how do you respond to critics who say that you're traveling the world pushing debunked conspiracies as part of a scheme to help the president's re-election?
And that's ridiculous, Stephen. I was simply bringing the American people the truth about the Bidens. And that's not all. I now have...
Okay, I'm back. And as we can see, I was right and I was wrong. Well, I was right that the stop loss should have been here, because that is the considered low of this wave fall. And so had I stayed in with my original decision, we would have gone up there. And as you can see, that line that I had, the box that I had drawn, it's still intact. So let's extend that a bit. And as you can see now, that's exactly where price bounced off. So this would have turned into a break-even trade. So I wouldn't have to have given the market $500 and instead not made any money. But does that make any difference in the long term? And that's the fun bit. It really doesn't make any difference, because in the long run you will win more than you lose, and that is what matters. So losing a trade is not a problem. Losing a trade is not a problem. The problem is if you don't follow your plan. The problem is if you try to avoid your losing trades. The problem is if you try to trade without losing. That is when you really lose money. And this is where a lot of people fail. They don't understand this concept of trading. You have to look at the past 20 and at least 100 trades and find out if you were disciplined at least 80% of the time. That means if you had followed your trade plan, that means if you had traded your setup one and manage your trades accordingly, according to the rules that you have, and within those parameters, if you were 80% disciplined, you will find that your account will still be in the positive territory. And for every 20 trades, if you risk 1%, and even if you have 70% disciplined, right, the statistics show that you will have between 5 to 10% profit. So by the end of 100 trades, which is 5 batches, you usually would be 30 to 40% up. And so what happens at the end of 150th trade? You have doubled your account. And that's what it is. Okay, so let me give you a brief again. Now I'm showing the entire screen with all the 3, 4, 5. So here we were, got out here. And so the theory was that if I kept my stop loss at where I thought was the bottom of wave 4, which is obviously this, now it's 100% confirmed. And so I was right about that, wrong about getting out. So I got myself stopped out just by a mere 2 points. So goes on to show that everyone makes mistakes. This was a wrong judgment. I did not really save any money because it's just 2 points. So I should have left it to hit this stop loss. And if I did it in that way, what would have happened is that at this point, it would have hit my break-even point. And if you look at the video earlier, I drew some these yellow arrows saying sometime it would come and do this, and then you would come back, in which case you will be stopped out. I'm going to put it around here that sometimes it would, because wave 3 is wave 3, right? It ended here because it is a fractal, because fractals means a change of behavior. So something changed in the market. That's why it stopped moving further up. So it is an important level. So obviously when price would come back to it, there are chances that it might react to it again. And it did exactly that in here. So just like typically it does, it comes here, and because it was 1 hour, although it didn't happen to me, but I know that this is part of my plan, that when it happened and it was 1 hour in my favor, ATM would have moved my stop loss to break even and I would have got out. That would be a desired result. But if I had a loser, no problem at all, because then I should have got in here, but I wasn't here because I just arrived. So when I arrived, I stopped the video and I was still looking at it. So you can see again it bounces there, but at the same time it's still a wave 4, and this is the message that I tried to get across in my other video, is that once you identify the peak of wave 3 and then the bottom of wave 4, and then when you have this B trap happen, or where the box tightens, you can consider that as wave 4 as long as it carries on. And this is the special situation where then it comes here. But notice this, briefly purple has entered the box, but it has never mingled with the gator, so never creating a setup 0. It was still a setup 1 and still a setup 1. Around here was a setup 1, and then here was the masterpiece. We have the cherry signal, and this cherry is a PC cherry because it's broken below. And let's zoom in here a bit, so you'll be able to see that this actually broke below. So it's a PC, which makes it really, really beautiful. And then what it does is that it has created a trade that required a 6 pip stop loss, and it went about 50 points up. So that's about 8 times. I got to target the target zone 1, so mine was about 3.5 R. So I made 2 R here, lost nearly 1 here, and made about 3 more here. So that's more than enough, and this is how we roll, baby. Any questions, comments, please email me, leave a comment, come to the chat room, whatever, and let's discuss it further if you like.